Ladies and gentlemen, boys and girls, how we doing? It's Brian Humphrey. We're doing another bookkeeping with Brian here today. Doing things a little bit different. I'll tell you why in a minute. First, the legal business information provided in this video is for educational purposes only and should not be considered as professional accounting, tax, or financial advice. Consult with a qualified professional regarding your specific situation before making financial decisions. Humphrey Bookkeeping LLC, its partners and employees are not responsible for any actions taken based on this information. Okay, so as everybody I'm sure can see, we've got a special guest today. We've got our fearless leader, enrolled agent, my mother, Jackie Humphrey. Jackie, how you doing?
I'm doing great.
All right. So the reason
Looking forward to going ahead with the conversations we had yesterday.
Oh, yeah, for sure. And speaking of that, that's why we're doing things a little bit different today. We've been talking here over the last few days. We're seeing kind of a common problem from many people that we've been talking to recently, clients and non-clients alike. There's some mistakes being made when handling business finances, and so they're pretty common mistakes, and a lot of times people don't even realize that they're making it. So that's what we're going to talk about today. So our fearless leader. Okay, so I guess first of all, you're an enrolled agent. Okay, so that's a
Yes.
credential that you've earned from IRS. Could you kind of explain? Because a lot of people are asking, well, ask us all the time. Are you a CPA? Are you a certified public accountant? And an EA is different. Could you kind of tell us exactly what an EA is and what an EA does?
Okay, so an EA is a tax professional who's licensed by IRS to represent taxpayers in any matters that come before the IRS. So they have unlimited practice rights, which means they can represent individuals or businesses or organizations on tax issues like audits or collections or appeals, something like that. That's pretty much what we do.
Okay. So how I guess is that so that's not something generally speaking that a CPA would do, that you would need
No, the CPA requirements are you have to go to school and take exams and so on. An enrolled agent does have to take a three-part comprehensive exam that you take the three different parts over a 2-year time period. And those exams, the part one covers individuals, part two covers businesses, and part three covers representation and ethics and how to do appeals and things like that.
okay. All right.
And then, so we have to do classes in order to be able to pass those tests. And then in addition, we have to do continuing education of 72 hours for in every 3 years. And
Oh,
it needs to be at least 16 hours per year.
okay. So I assume that's to keep up on all the new tax codes and things like that.
Yes, yes.
So really,
To make sure that we are
go ahead.
make sure we're up to code.
Right. So really being an enrolled agent is kind of just a way to know that you pretty much know tax code and at least some of tax laws, but tax code pretty much inside and out. So
Yes.
when you do bookkeeping and tax preparation, it's all kind of geared towards I guess tax compliance and things like that then. Okay.
Yes, it's always in the back of my mind to make sure that our clients are abiding by tax law
Okay.
when we prepare their returns.
All right, so on to this issue that we were talking about yesterday. So what we've been getting information from a lot of people about what's called commingling funds. Can you explain to us what commingling funds means from an IRS standpoint?
Commingling funds is basically a legal concept. Well, that's not really exactly right. It's not a legal concept. Commingling funds is mixing personal and business funds.
Okay.
Um, for instance, when a lawyer takes a retainer, um, they don't put that retainer into their business account. They put it in a separate account, but they don't put it into a personal account. They basically, for most businesses, commingling funds is going to be mixing personal and business funds.
Okay. And so that's not a good idea. Can you give us a couple of reasons why that's not a good idea?
Well, okay, so the reason we don't want to commingle funds is because when IRS does audits, and they do random audits, a lot of people think that they'll never be audited, but I mean, I've been audited a
No,
couple times. We've been audited, for no reason whatsoever, and not even having a business. But when um, IRS agents are trained to be able to recognize patterns in tax returns that look like somebody might be trying to either evade paying taxes, tax evasion, or not pay as much as they should, call it tax fraud, basically trying to avoid paying taxes. Now, making a mistake is not the same thing. Making a mistake isn't going to cause you that kind of a problem, but IRS is looking for people who do it intentionally. And a lot of times when people do it unintentionally, they still get called on the carpet with IRS.
Okay, so it sounds to me like basically the rule about not commingling is kind of a mechanism for IRS to help them prevent fraud is kind of what
Correct.
the idea behind the rule. And then
Yes.
um, so the way I understand it is that if you are found to be commingling funds, then now you might have to go through an audit that is not random. That's one of the things that will cause an audit if they find you to be doing that, just so they can make sure that you're not doing anything illegal, right? Okay, so
Correct.
there are obviously several ways to accidentally commingle funds. I believe you were saying yesterday that IRS considers four different ways, I think you had said.
I think I actually have five. I know that four, yeah, I have five. Okay, so if you're paying personal expenses from your business accounts,
Mhm.
that's gonna raise a flag. Also paying business expenses from personal accounts. For instance, if you have your organization documents that you pay for from your business, I mean, every business has to have some money to start up. So if you're paying it from your personal money when you're starting up, that's that's fine. But it needs to be documented that it came from your personal funds. Okay.
Mm.
Also, depositing business payments to your personal account, that's a no-no. Big, big, big no-no. And vice versa, depositing personal funds into your business account. Why would you do that?
Sure.
Another thing is if you own more than one company, paying bills from one company with another company's money, that is commingling. That is definitely going to raise red flags with IRS.
So then
Definitely.
in that particular situation, you're running the risk of both businesses going through an audit simultaneously, which nobody wants that headache. Okay, so basically the idea is, I guess, that um, obviously don't do it on purpose. But if you do it by accident, what can somebody do if they're like, oh my gosh, I can't believe that I just did this. What do I do to fix this? Is there anything like once it's been done, whether intentionally or unintentionally, are there steps that you can take to kind of make it okay, or is it just, well, I hope they don't audit me? Like, are you kind of up the creek, so to speak, or is there anything you can do?
Okay, so there are things that you can do, and completely legal, completely acceptable. One thing is that in your bookkeeping, in your register, your chart of accounts or your journal, however you do your bookkeeping, as long as you categorize any expenses, any personal expenses that you pay out of your business accounts, if you categorize them as owner's draw or money paid to the owner, distribution, or however however you have the chart of accounts set up, the main thing is counting it as a payment to the owner
Okay.
rather than a payment, say, to the grocery store, or because excuse me, there are times when all right, let's say if you go to Lowe's and you have to pick up parts for something and you decide you need to pick up something for your house at the same time. The best thing to do would be to pay for them with two different cards or two different accounts.
Sure.
If that's not possible, if you don't have that capability with you at the moment, maybe you left your business card at home and all you have is your personal card. The best thing to do is to write on the receipt, whether it was a business or personal expense, and it'll say on the receipt what it was for.
Mhm.
All right, so if you have paid with it with your personal funds, then the thing to do then is to write yourself a check for that amount later, or make a transfer from your business account to your personal account, denoting that that's what it's for. It's for that particular expense.
Uh,
Now, you don't necessarily have to do that for each and every one, but you want to do it for at least once a month. You want to take and pay yourself for all the personal payments that you've made,
sure.
or if you have paid for personal things out of your business account, you want to make sure that all of those things are counted as owner's draw,
Okay.
not as
You just basically
supplies or
want to make
whatever.
sure that everything is well documented properly in your books, because the way that you're going to pay yourself, if you're using personal funds, that can vary. There's different ways to do it, but really you just want to make sure that um, I guess that your bookkeeping is up to par, and you've got somebody that is making like detailed notes in your books about what is what when it comes to funds going in different directions, whether be it personal or business.
And keeping your receipts is going to be absolutely the best way to prove what you've done between those accounts.
Sure, because I mean during audits, IRS auditors they do have the right to request specific receipts from specific days from the period that they're auditing. So not everybody has them, not everybody keeps them, but the more documentation you have, the better off you're going to be. Um, okay, so really that's all I got on commingling funds. Is there anything else that you wanted to kind of point out to people before we go here?
There is one thing. We talked a little bit yesterday about piercing the corporate veil. And a
Oh,
lot of people have never even heard that term, or they might not understand what it means. So, piercing the corporate veil is a legal concept. It's not, it's just a concept that it allows the courts to basically hold the shareholders or owners of a company or an LLC personally reliable for the debts of the company.
right,
So usually a corporation or an LLC is treated as a legal entity. It's totally separate from your personal stuff.
right.
But if a business is found to be used improperly, if their accounts are used improperly, such as commingling funds, that's one of the things that they look for. or using the entity to commit fraud or whatever, a court may decide to pierce the veil of limited liability, which means that now your personal assets, it doesn't matter. Your personal assets are fair game because you have commingled funds or you've used your business to commit fraud. And we know that most of the time that that's not the goal of a business is to commit fraud,
Sure.
but we want to stay away from any appearance that, there could possibly be any antics going on.
Right. One situation where it could be common for something like that to happen is if you have, if somebody's got a small plumbing business that maybe they don't even have any employees, and it's just them. So when they get a check from a client after they complete a job, they might think to themselves, well, I'm just going to put this in my bank account. It's my money. What does it matter? And the issue with that is even though you haven't committed any type of fraud, you could have your accounts frozen while your personal accounts frozen while an investigation is taking place, while the audit is taking place. It kind of opens you up to, even if there's no criminal activity, there's a lot of hassle and a lot of paperwork, and now you've got to go pay a professional to help you out, and it just costs a lot of time and a lot of money. And why do that? You could just do everything the right way the first time. Make sure that your bookkeeper, your accountant, your enrolled agent, whoever you're working with, make sure everybody's on the same page and knows what's going on, and you'll just have just a much easier life all around, right?
That's correct. Okay, and there's one other little thing that I wanted to bring up too before we close, and that is you spoke about cashing checks. Okay, when you get a check for a payment into your business, don't just go cash it. Deposit it into your business account. We're going to assume that if you're our client, especially, that you have separate accounts for your business and your personal.
Yeah.
Don't ever deposit a business check into your personal account.
Right. And then also, like you said, don't ever
Correct.
cash either.
Right. And so the right way to do it is to deposit that check into your business account and then write yourself a check.
Right.
That's going to be your owner draw or your owner distribution, and then that way there's the paper trail, and IRS is not going to come and say, hey, basically, in some areas that might be called embezzling because you're taking money from the business.
Yeah.
Without documenting
it is possible to embezzle.
We don't want to go there.
People, if anybody that doesn't know that, it is possible. People do it all the time intentionally. Don't do it by accident.
Right. They embezzle. People embezzle from their own businesses all the time. And it's like, don't do that, please.
It's a mechanism to intentionally commit tax fraud. And it's like, you're just going to bring down a whole world of hurt on yourself. You're not doing yourself any favors. We all pay taxes. Just, bite the bullet and do it.
That's it.
All right. Well, thanks for being with us today. Hope this video kind of help somebody. I'm sure it'll help somebody. So yeah, that's all we got for this week. We're probably going to get back on track with the live videos next week. I can't remember exactly what the subject was supposed to be for today, but this came up earlier this week, and we just felt it was important to kind of get this out to people, just so people, maybe if we can get one person to kind of stop and think at the register or at the bank, then we've done our job. So, all right, well, that's all for today. Thanks for being with us, everybody. We'll see you next week.